Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, Mnuchin and other fine folks, to the Sunday dispatch of the Black Letter, where we contemplate thoughts worth thinking as we try to navigate through the upside-down, topsy-turvy world we find ourselves in, seeking greener pastures on the other side, hopefully coming out healthier, wealthier, and wiser. Welcome to your weekend. It's Saturday. We're going to take a look at the ECB and the Euro area, see if they're in for another contraction, which it seems to be. We'll just look at the difficulties in the G20 currently without fiscal stimulus. Take a look at Japan's CPI, which seems to be in a deflationary mode. And we're also going to take a look at Mnuchin and him clawing back some of the stimulus that was provided earlier. So first off, at Bloomberg, ECB's Guindos says a euro area economy set for another contraction. The euro area economy may shrink in the final quarter of the year as a second wave of lockdowns to combat the pandemic derails the recovery, European Central Bank Vice President Luis de Guindos said Friday. My personal view is that in the fourth quarter, the projection we had is not going to be met, Guindos said at an online event. Growth is going to be close to zero or even negative. Euro area output increased 12.6% in the third quarter, and in September, the ECB projected 3.1% growth in the final 3 months of the year. Since then, restrictions have curbed travel and shut restaurants and some shops, curtailing economic activity. And you can see it here in this chart. Crash in economic activity. Alternative high-frequency data show a strong downtrend in Europe. Germany in red, France in blue doing worse, Italy in orange, and Spain in yellow all sort of trending down. We forecast the bloc's economy will contract by 2.4% in the fourth quarter. So that's definitely not good news, and I think the way things are going, probably see the same here in North America, if not because of lockdowns, but because people are probably going to self-impose on themselves certain restrictions, especially as these cases are just escalating and practically hitting new highs every day, it seems, lately. From Reuters, ahead of G20, the United Nations chief warned the developing world on a precipice of a financial ruin. United Nations Secretary General Antonio Guterres warned on Friday that the developing world is on the precipice of financial ruin and escalating poverty, hunger, and untold suffering as the world struggles to combat the coronavirus pandemic. And of course, the developing world is in a particularly dire straits because they don't have the same social safety nets and securities that we take for granted here in the West. And so I think there's going to be a need to help bail out many of these developing world economies in the coming great reset that's probably going to happen this decade, I would imagine. Japan's October CPI falls at sharpest pace in over 9 years amid pandemic. Japan's core consumer prices fell 0.7% in October from a year ago, marking the sharpest decline in over 9 years, weighed down by a domestic tourism boosting subsidy program and weak energy prices amid the coronavirus pandemic, government data showed on Friday. The decline in the core consumer price index also came as it lost momentum in year-on-year terms over the past year, driven by a sales tax hike from 8% to 10% implemented in October 2019, according to the Internal Affairs and Communications Ministry. The core CPI, excluding volatile fresh food prices, dropped off the third straight month, and economists expect prices to remain weak, reviving fears of the country slipping back into deflation, despite the Bank of Japan's massive monetary easing program. Well, consumption taxes certainly will curtail unnecessary consumption to some degree, but 8 to 10% jump is not massive, so I don't think that explains it necessarily. You can see here the last month, the Bank of Japan lowered its CPI forecast for fiscal 2020, projecting a 0.6% year-on-year fall, far from the bank's 2% target of inflation. Now, there you have it. So I think deflation is coming. Will we have inflation in the interim or first? That remains to be seen, but I think it's certainly possible. Hard to tell, though. Time will tell. In the meantime, we need to be prepared for either outcome. And I think deflation, of course, is the hoped outcome because that helps us. Lets our income and savings go further, but we'll have to see if we're able to achieve that, which is up against the vast difficulties that the Federal Reserve and the central banks around the world and the governments are trying to encourage inflation with all the massive monetary printing. So we'll see if that will cause inflation. I imagine it must at some point, but I think long term, of course, we're in a deflationary environment thanks to technology, which is all for the best, in my opinion. Munition clawback of Fed funds, deeply irresponsible, Biden team says. U.S. Treasury Secretary Steven Mnuchin decision to defund several Federal Reserve coronavirus lending programs on December 31st is deeply irresponsible, President-elect Joe Biden's transition team said on Friday, and threatens to undermine the country's fragile economic state. And in support for Fed programs that could be used for small businesses across the country when they are facing the prospect of new shutdowns is deeply irresponsible, Biden's campaign said in a statement. Mnuchin surprised Fed officials on Thursday by demanding the return of unused funds set aside to support Fed lending to businesses, nonprofits, and local governments. Mnuchin said the surprise move would not bind the hands of the next Treasury Secretary and that grants to firms, more paycheck aid to workers, and unemployment compensation were better uses for the $455 billion in already borrowed funds. The next administration would still have an $800 billion bazooka to quell financial market distress, he said. Federal Reserve Chairman Jerome Powell and Chicago Federal Reserve Bank President Charles Evans have criticized the Treasury move, saying the program due to lapse, while little used to provide an important backstop for the economy. I think that backstop role may be quite important for quite some time, so it's disappointing, Evans said on CNBC. The virus spread is increasing, and so there are risks from that. It would be good to have more support coming from all directions. So really, you can see the politics being played here. I think both sides maybe have a point to make, but regardless, when you can't even get things together on a government level, how can you expect the economy to recover when folks can't get stimulus payments? It's just appalling, really. This is no way to run an economy. And let's face it, we have the government heavy-handed in the economy right now. So everything is really following the socialism in some degree. Currently, it's for the businesses and the banks and the big hedge funds and the wealthy. But of course, it needs to trickle down to the rest of us with stimulus payments and a UBI of some sort, which I think probably is imminent at some point, maybe part of the Great Reset. Who knows, especially with these central bank digital coins. Perhaps you'll get a UBI payment, or perhaps you'll get a stimulus payment if you get the vaccine or something. I don't know, but really, we're in tough straits here, and it's going to be a challenging year ahead of us, I'm sure, especially if Democrats aren't able to win those 2 seats in Georgia, in which case we have a clogged Congress, and probably very little will get done. Okay, here's the S&P 500 from the previous week, and surprisingly, it's down negative 1.28%, which is a surprise. I thought it would be up. And if the S&P, maybe the Dow Jones will be up. Perhaps not the NASDAQ, but let's see. Okay, so the NASDAQ is also down a negative 0.79%, or down slightly 79 basis points. So interesting. I would have thought it would be an up week generally. Perhaps the Dow Jones was our savior. Here's the Dow Jones, also down a negative 1.13%. I'm surprised by this. Mind you, maybe I shouldn't be. The last week was a bit choppy, that's for sure. And you can see it was especially in the back half of the week, probably the 19th and 20th, 21st here. So interesting. Yeah, it was Thursday, Friday, I think the wheels started coming off the train. Okay, so only the Russell 2000 was up overall, just at 1.56% in the positive. So that's something. We'll see how next week goes. As you know, I think we're at a sort of a fulcrum here where either the economy, the markets, I should say, rather, are going to head upwards. And we'll see maybe 15,000 on the NASDAQ, maybe 4,500 on the S&P, or alternatively, they're topping and we're eventually going to just roll over into a bear market. I'm not sure which one is most specific, but we'll have to wait and see and be prepared to get out of the markets at any point. Okay, gold as well is also down for the week at down a negative 0.91%. I imagine silver will be much the same, if not a little more. And here we are, silver down a negative 2.05%. Very interesting. Let's take a look at Bitcoin. Okay, so this is the Bitcoin US dollar for the past 5 days, the past week. And you can see that Bitcoin is up 18.46% over the past week, which is quite astonishing, really. That's something else for sure. But there you have it, the best performing asset of the week, probably of the decade, of the year, etc., etc. But it's getting close to the all-time high, so we have to remain vigilant about that and perhaps look to buy into the sell-offs. At least that's my impression. All right, cryptocurrency market continues to do well, up 3.2% of the past 24 hours at $548 billion market cap, 5,970 odd coins for you to ignore, and the Bitcoin capitalization, or dominance I should say, is 63.5%, so come down a little bit. You can see here XRP has jumped substantially, 32% in the past 24 hours, which is quite astonishing. Bitcoin Cash up quite substantially, and Cardano as well. Bitcoin up just slightly. So, I mean, that's quite a rocket ship. I'm not sure what's going on there, if there's any news. But anyway, for those who hold XRP, I guess it's good news at all. It's now at 41 cents. So there you have it, folks. So we've been talking about the CPI index in Japan and how it's sort of looking deflationary. And of course, there's an argument to be made that we're in deflationary times due to technology primarily. But on the other hand, there's also an inflationary push that the Federal Reserve and other central banks are really trying to ramp up with all their monetary printing. Now, I'm not sure which one is going to win. I think long-term deflation will, but in the next 5 years, I think it could go either way. So my question for the 8 ball is, will we have inflation before deflation in the next 5 years? Inflation before deflation. Don't count on it. So the magic 8 ball, our 8 ball economist, our trusty sidekick, doesn't seem to think we will have inflation before deflation, which I would interpret as meaning that it sees a deflationary future from here on out. We'll have to see about that. I'm not certain. But there you have it, folks. Thanks so much for joining me on the Saturday. Hope your weekend goes well. Remember to pay down debt, score away some savings, and take the opportunities as they come in the next little while. And remember, above all else, spiro, spero.